On this episode of Industry Relations, Rob and I debate the meaning of the SVB bank situation. Let's go.
This is Industry Relations, a podcast that's at the intersection of real estate and technology from an insider's perspective, with Rob Hahn and Greg Robertson.
Hello, everybody, and welcome to another special edition of Industry Relations with Rob and Greg. We're going to sound pretty happy while we discuss the end of the world. I am your co-host, the Notorious Rob. And with me, as always, is the fabulous Greg Robertson. What's up, Fab?
I told you about that. Hola, Rob. I'm in the state of Washington. I'm in Sumner at my sister's beautiful house right here on the Puyallup River. So I'm coming to you remotely.
Nice. Yeah, I was going to say that wallpaper does not look like your standard fabulous whatever poster background, but it's fabulous nonetheless.
That's an accent wall, Rob. Okay, so
fabulous nonetheless. All right. Well, so clearly we got to talk about the end of the world.
Yeah. Well, I mean, this is right up your alley. This is catnip to the Rob Hahn.
I already wrote 2 posts about it, and I did get somebody on LinkedIn saying, I want to hear about this on a podcast, because she misses that. I'm like, we'll do the podcast. So, bunch of caveats right up front, okay? Unless I know differently, Greg, you're not a banking expert.
No.
Okay. Neither am I. Neither of us are banking experts. So this is, a couple of idiots, opining once again, right?
That could be the name of our next podcast we do together. A couple of idiots opining
again. I like it, actually.
However, got a ring to it.
However, we do think a whole lot about various world events and its impact on real estate and housing. And so I think we want to look at what impact, if any, there would be on housing from the latest wave of like, holy shit, who saw this coming? It's one of those like black swan things. I know I did not have, was it either the second or the third largest bank failure in U.S. history?
Oh, yeah. No.
Silicon Valley Bank, I think, is either the second or the third largest.
Top 20 bank, right?
Yeah, I didn't have that on my 2023 dance card. That was not there. So this is definition of black swan. But let's set things up a little bit because again, I'm assuming that most of our audience, given their sophistication, they follow it. They know what's going on. But just in case, right? So bunch of banks failed. 3 of them have failed. They are Silvergate, they are Signature Bank, and of course the big one, SVB, Silicon Valley Bank. Silvergate and Signature didn't freak anybody out, I don't think, because both of those were seen as sort of like crypto banks, right? So they were seen as the bankers for the crypto industry, which, went through some hell in 2022, all the scams, all the Ponzi schemes, all of that.
FTX. Yeah.
Right. So I don't think anyone was really caught by surprise by those necessarily, but it was the Silicon Valley Bank, SVB, that like sort of broke things, right? So Silicon Valley Bank's been taken over by regulators. They're essentially shut down. And a bunch of people panicked, right? Because most of the depositors in Silicon Valley Bank are very wealthy individuals or venture-backed companies or venture funds themselves. So they were way above that 250,000 threshold, right? But then the government stepped in and basically said, we are going to make all those depositors whole, right? So essentially ignoring the 250,000 limit. And I think the reasoning I heard from Secretary Yellen, I think it was even today, was that because the Fed, the FDIC, Treasury officials thought this bank was systemically important. If they didn't do that, it would have caused bank runs, just across the country. So they felt they had to step in to to prevent such a thing from happening and the entire sort of banking system collapsing. So again, whether you agree or disagree, that is the reasoning. They did it. And in addition, the Federal Reserve came out with this new program that they're calling, I always get this, bank term BTFP. It's a bank term funding program.
Right.
And I don't understand it fully, but the big thing about it apparently is that banks who have government paper, so either treasuries or agency mortgage-backed securities, agency MBS, Fannie, Freddie MBS, could take those as collateral to the Fed through this facility and get par value, right? Because really what happened from everyone that I've listened to over the past 3 days or so is SVB, Silicon Valley Bank, went out when they got all this flood of cash, from COVID, right? Not from COVID, from all the stimulus, as a response to COVID, PPP, EIDL, all these things. And it just dramatically increased their deposits so that they took all this money. They didn't have anywhere to put it because venture capital backed companies typically don't borrow money. Like they're not going to a local banker and say, I need a business loan. So they went and bought a whole bunch of MBS. They bought a whole bunch of treasury bonds at the top of the market, meaning rates were like 2%, right? They were really low. So these bonds were paying very low rates. And then as the rates went up, those bonds lost value, and therefore they were out of sync and went belly up. So the idea is going forward, if you have those types of bonds, you could just bring them to the Fed and get full value that's significantly above market value. That's kind of what I had heard. So at this point, things have somewhat quieted down.
I've heard a little bit. I mean, I would add a little bit more color to that, but I mean, I think you're okay so far. But there are some things. I mean, I read one of your posts. I think there's some things you got wrong there.
Okay.
But I think overall you're kind of painting the right picture.
So So again, factually, I think I'm just laying out factually, as far as I know, there may be things that are missing. There are people who think that SVB and some of these things were just really badly managed. One of the funny ones I heard was apparently Roku had $487 million sitting in SVB. And the commenter was like, what does the CFO of Roku do every day? You just have to manage this one bank account? Because his thing is sophisticated CFOs and corporate treasurers who have to manage that much money. They all know about the $250,000 FDIC limit. So they do all these sophisticated things, have, 200 different bank accounts, whatever it is, and all this sophisticated programs.
Well, in that case, you'd have to have 1,900 bank accounts. I mean,
or something, right? Whatever it is that they do. Yeah. But this guy's point was, if you're just leaving it in the bank, then how much work do you have to do? Anyway, so who knows, to the extent which any of that was going on. But for a while, until the federal government came out with this whole program and bailouts and all of that, there were reports that a number of other banks were very close to the edge, right? Most of them, I don't want to say most of them, but I think a lot of them was West Coast, like First Republic out of San Francisco, West
I don't know if that's fair. I think, there's anybody who has bought mortgage-backed securities more than a couple years ago is in. I think I saw a thing from even Bank of America on what the real par value of those are right now. I mean, luckily they don't have to report that, but and that's definitely an East Coast company, but
sure,
yeah.
But that's kind of there were a number of banks, and then they sort of rebounded after the Fed announced kind of the rescue, right? So I thought, okay, it's all sorts of craziness going on. Literally, it seemed like everyone's talking about it in a variety of angles. Obviously, you could imagine the Bitcoin and crypto guys are like, yay, this is exactly what we're predicting. I'm not quite yay, because I'm like...
But even then, because their two banks fucking bellied up too. So, I mean, on one level, it's like, if this didn't make the crypto guys... It wasn't their shining moment, right? If there was ever a time for something to be crypto's shining moment, it was now, and it Didn't happen.
I don't understand how that would be. I mean, it's not
Well,
like
I mean,
those,
two of the largest banks that were basically, in the crypto, they failed also.
but they weren't in crypto, right?
Well, I mean, the way you started out
They,
was,
no, no, no.
how
What I
did
mean,
you describe?
so I'll give you an example. Like if Roku, if these companies, if all these VC-backed firms had, instead of leaving $487 million in, in one bank, right? If you had taken, say, 400 million of them and put it into Bitcoin, then they could pay people with Bitcoin.
Yeah, I mean, yeah,
They could,
I don't know.
as long
I mean, I can
as long
only
as those people
imagine
were
what.
to accept it, right?
Yeah, I can only imagine what Wall Street or anybody else would say about the headline would be Roku bought $400 million of Bitcoin would make that CEO look, in mainstream even stupider, right? So,
Would it? I mean,
in this, I mean,
MicroStrategy is doing okay.
after
They're making payroll.
FTX and all these other things, I don't think it's like something that's universally people think is a
Sure,
smart
you
thing.
could have that. All I'm saying is you can't say that this was crypto's moment when none of those companies were using crypto as money. They just weren't. Like they weren't.
Right. Well, I guess, and the other thing is that, this has shown that, even in big events like this, a crisis like this, that there's still something, and whether you can agree with what the government did or not. I mean, it's not like it didn't get taken care of. It did, and very quickly. So we resolved the crisis. Yeah.
The problem with that, of course, is second or third order effects, right? Okay, it's like, fine, you did it. And that's what I want to discuss. Right?
Well, okay. And I think the problem with that also, though, is, Rob, is like what you have to gamble on is what would the second and third order effects if you did nothing, right?
Sure.
And I think it's what is the lesser evil in a sense, right?
Sure.
For sure. And then, I'll go back to a little bit of your description, which I have a little bit of a problem with, where.
Sure.
So let's just talk about why this happened at Silicon Valley Bank, right?
Yeah.
And this is my understanding, right? And to me, this is kind of almost a perfect storm situation, right? So, as we talked about before, this is all because of the pandemic, in a sense, right? This printing of money or whatever. But let's put it more of a finer thing to Silicon Valley Bank. So back in the day when money was cheap, VCs would fund companies, right? And a lot of those companies, the VCs were customers of SVP. And then if they had if they were funding a company, well, hey, my VC's using the bank. Sounds like a good bank. Maybe I'm going to use it, right? So back in the day, there was a lot of, the way that bank got a lot of money was through the VCs. They'd be funding these companies, and these companies would put it back in the bank, right? So you have that cycle going on. So, they do with it whatever other bank was. They try to find the lowest risk thing they can, mortgage-backed securities, treasuries, whatever. They buy that. That's how a bank works. But then something started to happen where the interest rates started pulling up, and then the VCs backed off of funding companies, right? So there wasn't this cash flow that kept coming in, right? But but at the same time, some of the companies that the VCs were funding were also still spending money like, it was 1999, as you say, right? It was still, they didn't really kind of get the memo as VC said, hey, back down on your spending. It's going to be a long time here, but some of those companies did. So you had a perfect storm situation of deposits are kind of dried up because VCs aren't funding anymore, but also these VC-backed companies are still spending, and that's also money's not coming in, but money's going out still at the same rate or close to that same rate, right? Then you get into a situation where, it starts to look like, well, damn, do they have enough cash here, right? So, and then the bank run comes, right? So to me, this is less of like bailing out it's been, it seems to be drawn a line of like everything nowadays, the conservatives and the liberals of like, of this thing. I don't think there's anything inherently wrong with the government coming in and to direct and protecting depositors, right? There's people at Silicon Valley Bank that went into a bank and they deposited their money, and by no fault of their own, Silicon Valley Bank came into a situation where it's like, well, shit, we don't have enough money. We have these mortgage-backed securities, but if we sell them now, we're selling them at a loss. right? Because of the bond of the interest rates. You're on mute.
No, which is what they did, by the way. They ended up selling those
Yeah,
things at a loss.
yeah. So it's like when then Wall Street hears that, it's the bank run, right? So again, to me, absolutely, you could say is mismanaged. The guys from the management of Silicon Valley Bank, the investors and so should not make a dime off of this, right? This is clearly that, but at the same time, there's other factors that went into this than it to be some sort of nefarious moral hazard, as I've seen you and others describe this as. I just think this is a bad situation, mismanaged, and a perfect storm situation of what happened here. Not a moral hazard here. I mean,
No.
I don't look at this thing at all as kind of a moral hazard at all, as a lot of described it.
So first of all, let's just make sure we're talking out of the same playbook here, right? Because I want to show you. Okay. So this is a chart of SVB, right? Like if you look at the yellow line here, right? I mean, you see, like until 2020, the deposits look like this. From 20 to March of 22, the deposits spiked up like that, right? So that's, again, this is not a political thing. It's just reality. Like March of 20, we started doing the money printing like crazy, and then the deposits went up like that, right? Is that because of VCs?
That's a correlation you're making for sure. Yeah.
I mean, I think it's causation because all this money had to go somewhere, right? I mean, it had to go into bank accounts. Do you know what I mean? So the deposits, right, yeah. This wasn't Silicon Valley Bank saying, please give us all this pandemic funding. That's not what happened. This was simply people got a whole bunch of money from the government. They have to put it somewhere. So it went to Silicon Valley Bank.
No. I don't think it's that. I mean, if you look at there's a chart out there with shows the amount of money being invested in prop tech. That
Sure.
This has been it was 8 million, 18 million,
sure,
218 million.
Sure.
This wasn't because they got a PPP loan.
No, I bet it's both. I'm saying it's both.
You don't get 218 million from a PPP loan.
I'm not saying, but I'm saying if you have thousands of startups and they're getting $1 million here, 2 million there, like that's all going to end up in Silicon Valley Bank account, right, as a deposit. That's what I'm saying. And right?
Yeah, I guess I agree with you that there's money there because we were printing money, right? But as far as people taking advantage of X, the banks, people were lending money at a very low interest rate, and they were taking that money.
Yeah. No, so I'm not saying anything other than the government, the Fed printed a lot of money in 2020. Okay.
Right. Okay.
If it'll make you and your side happy, Trump did it. Okay. Trump did the printing.
It's not a Trump or a
blame Trump.
A Biden
that's
or
what
a
I'm
Bush.
saying. That's why this doesn't feel like a left-right Republican Democrat. It's just fact.
But it's showing up as that. It's showing up as that. I mean, depending on what news channel. This is the bailout of the tech industry. No,
this is not a bailout. But it kind of is.
Isn't.
Yeah, it is. Yeah, it is. And so this is the second point. Okay, you're saying the Silicon Valley Bank management and their equity investors should all lose everything, but make the depositors whole, right? The problem is what we just talked about with these CFOs and corporate treasurers, right? There's no rational basis on which a large company like Roku leaves $487 million in a checking account at a bank, knowing that the FDIC insurance limit is $250,000. There's just no excuse for that. Is all I'm getting at.
Again, that's a mismanagement thing as well. That is not
correct. But if you are the depositor here is Roku, should Roku not lose that money?
Right. I mean, sure. I mean, I get that.
Right.
I get it. But again, the government had to make a determination of whether the first and second consequences of them saying no to everybody were worse than coming in and protecting those depositors.
Sure.
Now, there were dumbasses for sure, and hopefully this is going to teach a lot of people a lot of lessons out there. But yeah, Absolutely. I don't think buying Bitcoin with that is
let's just stick with that.
But...
And it is about the tech industry, because one of the things that people talk about is, well, the unique things about SVB was that the average depositor, like, let's put it this way, SVB is not available to people like me. They might be available to you.
You can open up a bank account in SVB. I'm sure you could have.
No, you cannot.
Why?
No, you can't, because they have certain minimum.
It's a regional bank.
It's not a normal regional bank, is what I'm saying. They don't have. It's not like that. I have a buddy of mine, actually, who's a venture capitalist, who dealt with this personally, because his personal bank was SVB, right? And so the average deposit, I think what I read was 2.4 million at SVB. That was the average account size. Okay. The average throughout the rest of the United States is something like $5,800. So your everyday, working Joe, your pizzeria down the street, they're well under that 250,000 limit. It's just SVB was very peculiar, because it's where the rich, the VCs and their VC-backed firms did all their banking. And there's nothing wrong with it. You're a Silicon Valley bank, right? Like, you grew up with the tech industry. You grew up with that. That's fine. And I'm with you. Like, so 2022 comes, the economy starts going south, the VCs start pulling back, right? And I agree, like 2020, 2021 was probably the easiest money we'd ever seen. Like, VCs were flush with cash, like, we got to invest. So, term sheets left, right, and center. All of that happened. And SVB did the right thing to a certain extent, right? Because you're a bank. You're not supposed to invest in risky shit. You're not supposed to go, take that money to Vegas and put it on black. You're supposed to invest in safe, solid securities. So They picked the safest and most solid securities, which were U.S. Treasuries and mortgage-backed securities, right? So far, so good. Everyone I've read, everyone I've listened to, everyone I've heard trying to understand this, no one questions that part. The part they question is, okay, but you're a banker. Like, you and I would be like, yeah, okay, that makes sense. They're saying is, when you're a banker, the thing that you know about banking is the classic mismatch, right, between sort of short-term liabilities and long-term assets, right? Because all the deposits are on demand. So if somebody comes to you and says, I want my money back, I want to empty my account, you got to give it to them. But all the money is lent out in these long-term loans, or you have these securities that are 10, 20 years long. So what they're saying is, your job then, risk management, is to figure out how to hedge that risk, figure out how to hedge duration risk, right? Invest in certain types of complex derivatives, or do whatever the hell you got to do to know, if rates go up, the value of my bond is going to drop, so I need to do an interest rate swap, or I need to take out insurance, or do whatever.
You got to hedge it.
Right?
Yeah, you got to hedge it. I mean, but again, and I should have listed this in my perfect storm situation. I meant to, but forgot to, is that there's been, I think it's been 50 or 70 years of the stat that, and we've talked about this stat before, that in the time of the history of the country, the interest rates have been risen as quickly as they have, this past year. So this again is a perfect storm situation, a black swan situation where, they might have been caught on their heels a bit here, but it's like, it is a little bit understandable. This has never happened in 70 years, right?
Sure, but again, and this is what we don't know.
What else are they supposed to do? What else? I mean, again, it is a kind of a black swan event. I mean, there's again, you add that, you add everything else that's going on. I mean, I guess maybe I'm being more of an apologist for these guys, but I just don't see it as a conspiracy, to keep the tech industry, up afloat, right?
No, nobody thinks conspiracy. What they think is, like, the privileged few get their money out, which is what happened. Let's put it this way. Do you think that the government would have done this? Hold on. Do you think they would have done this extraordinary thing if this wasn't Silicon Valley Bank, but it was like Iowa Valley Bank, and the average depositor was not a venture capitalist that, big time,
if they
whatever.
Were farmers?
But, farmers and pizza. Yeah. No, they would not. No,
in fact, in this country, they're going to let farmers go bankrupt. Bullshit.
Dude, they have.
No,
You make it sound like
Listen,
SVB is the first bank that failed. Banks fail all the time, Greg.
right. But what I'm saying is that the amount of deposits, the fact that they were a regional bank, and this was going to cause some sort of stress. And again, let's throw social media into the mix, right? As fast as these kind of communications can go out, if it was called Iowa Valley Bank, or if it was called Silicon Valley Bank, or whatever, the government stepped in because they realized that if there's a bank run on these regional banks, we're all fucked, right? And I don't think it has to do. It was just because of the naming convention of the bank.
You're speaking as if this did not already happen. Banks fail all the time. Okay, so regional banks fail.
Talk to me about the time. Talk to me about the number of assets in this type of situation, that has happened, to a bank like this. I think this is an unusual situation. You can say banks fail all the time, but not in the way that this is happening.
Greg, you could say not in the way, blah, blah, blah. I'm just putting, like, you're arguing something that's not arguable. There have been 563 bank failures from 2001 to 2023. This is the first time ever in 23 years we've heard of the government stepping in and say, we're going to make all depositors whole. What that implies is in all those other failures, if you, the depositor, were an idiot and left more than $250,000 in the bank, you took a haircut. You did not get all your money back. You got your $250,000 insured back. And then whatever's over and above that, there's this complicated thing where, they have to sell the assets of the bank and blah, blah, and pay you out like 80 cents of the dollar, whatever, right? That's what happened in previous 563 failures until this one.
Yeah, again, I'm saying this is I'm just saying this is a unique situation, right? This isn't like that.
You could justify it all, which is what you're doing, but I'm saying it's fact that the government failed to do this for any other bank.
Yeah, because they didn't deem that there was a reason to do that. In this case,
they didn't deem it as a systemic risk.
Well, I mean, what are they supposed to do, Rob? They're just like, we did it last time, we're just going to do it this time, without looking at each situation, without looking at each problem as being different and what effects are going to have on there. Of course, they're going to do that. I mean, so in 251 times, 250 didn't meet the metal of what they were supposed to do, but this one time it did. That sounds to me like something's working, not that something's broken or bad.
Okay. So basically the government rescues. Sure, fine. Let's go with it. You being a tech entrepreneur, you defending your own privilege as technability, it makes sense to me.
This is what happens. It's like, this gets back down to because it's like, it becomes like only the tech,
Greg, I'm agreeing.
Tech.
Greg, I will agree that the government rescued SVB because it was systemically important. And of course, they also rescued Signature Bank. But, it was systemically important. These are big banks. So therefore, the government had to step in and make the depositors whole. So far, okay?
I mean, what if the criteria was just like none of those banks reached, I think SVP was a 20. Hold on, fucker. I mean, what if the thing was that none of the 251 banks that you mentioned before were, what if the line was like, below there's 1 through 20 of the largest banks in the country, right? I mean, that's a special. We got to look at those specially. Anybody below that, who gives a shit? That's whatever. I mean, there's some criteria that they tripped the wire for, right? It wasn't because tech bros. We're saving the fucking tech bros.
No, I get it. You defend the criteria when it's big, then we should rescue them. When it's small, fuck those guys. I mean, that's basically your point.
I'm not saying that.
That's exactly what you're saying.
Every situation is different because it's not a fuck you guys. Right. It's like the consequences of a small bank happening.
Sure, then fuck those guys. But a big bank, then no, rescue. Right? That's the point.
It's not fuck you guys. It's like if we don't this, the whole country's fucked. So we're gonna do something. Right?
Right. So when you have a deposit,
when it becomes a situation that could fuck the entire country, we're going to step in.
That's right.
If it's only going to fuck some few,
right.
Maybe not. Right? It's not going to reach that freaking metal, right?
And you're saying that's totally fine. That's perfectly legit.
I don't want to apply the same rules for everybody. That doesn't make any sense at all.
Okay, yeah,
course
different
not.
rules for different people, different
Of course.
companies.
Of course.
Okay, cool. And you defend it, cool, fine. So let's just go forward with that. Like, that's my point. Okay, that's my point. I mean, you've just described not America, but that's beside the point. Like,
That's
you describe
capitalism.
medieval Europe, but okay, let's go forward with that. Right?
Oh, God.
So now the issue is this, okay? What would the impact be on real estate and housing? We finally get to this after 30 minutes of you defending the rights of the nobility to get their money back. Now that we live in this nobility-driven world.
What am I defending? First of all, I just want what you think I'm defending.
If you're too big to fail, then we should rescue you.
Yeah, I mean, what? Let's move on.
Okay, so now the issue is, what impact will this have on us, on our industry? So when I wrote, and obviously you've read it, I think in the short term, this is really good for us. Right? I mean, I think the title of my post is "We'll Party at the End of the World." Because in the short term, what I'm reading from a lot of people, it could be totally wrong because they don't know any more than I do or you do. They think there's interest rates. It's like hiking of rates is done. They think it's over.
That's not true.
You think that'll keep going, huh?
Oh, yeah, absolutely.
Okay, give me your reasoning.
Steak dinner? I mean, it's another steak dinner bet?
Sure. So by the end of this year, the projection was that the terminal rate would be something like, what did I hear?
I haven't heard, I've never heard the end of the year. I've heard, to me, it's always the next one. The next time they meet, will they raise it 25 basis points, 50 basis points, or 75 basis points, right?
Sure.
So I thought we were on a path before this happened because the inflation, still a little bit hot. I think those guys were, and they were signaling, we're not gonna stop doing this, right? So my thing is, those guys were going to go to 75 basis points again. They're going to go back to that. After this is probably, again, because they're seeing that this rapid rise in interest rates are having other effects than they really thought of, right? So I think they go to 25 basis points on this next meeting. Okay. You're saying 0, or they pivot, they go back.
No, but a lot of the consensus 25 or pause.
Right.
But that sort of split. So let's put it this way. What about the meeting after?
Another 25 basis points.
Okay. So let's bet on that. Let's bet on the meeting after the next one. Okay.
Okay. So I guess that what we're betting then is that by the next meeting, it'll be 50 basis points.
No. Let's make it simple.
No, if they raise it 75 at this next one, I win, right?
No. I'm saying the meeting after this next one. Right. The March meeting is like this week, next week, I think. Right.
Right.
So the April meeting, right, I will bet that the Fed will either pause or cut rates. Okay, so you win if the Fed raises rates in April. Okay. If they either pause or cut, then I win.
Okay. I'm with you. I'm in.
Okay. Fine. God, having said that,
I can't eat this many ribeyes, Rob.
Yes,
it's physically impossible for me.
What are you talking about? I've seen you eat ribeye. Okay, so you think they're just going to keep raising rates?
Yes.
Okay. I don't, but that doesn't matter. So then is the idea that because after all of this, we're just going to see housing continue the same trend? Prices kind of slow down, fall a little bit. Demand absolutely crushed because mortgage will go to 8%, I guess. 7.5%.
Yeah,
I mean if they raise rates another 25 bips, like mortgages have to go to 7.25%.
Well, it's not completely tied, but I mean it's going to go. It's not. I think what the market would love would be a 5%. I don't think that's going to happen. I think it's going to be over 5% for the foreseeable future here.
Okay. So you think mortgage rates will continue to rise throughout this year?
I think it's going to be one of it's been like this. It was at 7 just a few weeks ago, and now it's back to whatever. So I think you're going to be in this kind of like 6 to 7 plus kind of thing, and just bounce around in that kind of area for the rest of the year.
And then home prices will just continue to fall because there's no buyer demand.
Again, so I think that's all local. I think in some markets are still, I was talking to somebody in Denver market.
Yeah, but that's the stupidest dodge that every realtor uses. It's all local. Okay, fine. But nationally, there's a market, and nationally, there's a trend, right? Nationally, we see transaction
and
numbers
there's not
are
a
way
trend
down.
in goddamn Orange County. There's not a trend in. I was talking to Chicago. He got 5 offers on his property.
Okay.
It
So
depends
my
on the
point
different
is,
areas
we're
that we're
talking
in.
national figures, and realtors always go local. I don't give a shit about your local unless I'm talking in your local. We were talking about national numbers just now. Mortgage rates are national. They're not local to Orange County, So nationally, are we going to see drop in transactions, rise in transactions, drop in home prices, rise in home prices? Because I was seeing, so let's preface, I was seeing after this bank failures and Fed action, I'm like, okay, this is inflationary as hell. And I think they're going to cut rates or pause or whatever, right? And I think the bond market forces them, but that's a whole other story. So therefore, we should see drop in rates, in mortgage rates, and we should see like real estate's going to boom this year. Kind of what I was seeing.
I hope. I mean, as much as I hope that would happen, we still have a supply demand problem.
You can't see that happening if you're saying rates going to keep going higher.
No, I mean, I would, but for the industry, I would love for that to happen. I don't see it personally as far as, from the stuff we're talking about and the stuff we're seeing.
Okay. All right.
I mean, what is it now? I think the stat I saw was like, there's something like high 600,000s of homes available, active listings on the market. And we've got 1.5 million realtors. I mean, it's just and we're coming in the spring selling season, right? So
yeah,
a lot of the bulk of the stuff is supposed to happen here now as we get into summer and then later in the rest of the year. So if we don't see that shit happening really soon here, I can't say that you're going to see the things that you're hoping to see happen. I mean, the transactions are going to go up in the fourth quarter. I mean, I guess we did see that a little bit in the pandemic, but I mean, that was
like I said, if what I'm thinking is going to happen happens, meaning the Fed starts pausing or cutting rates soon, like they pivot soon, right? As well as some of this other stuff that I think is going to happen, like some of the diversification of these wealthy individuals and companies will be like, we need to get the money out of the bank. Like, that's not safe. We need to put it into things like real estate because that's real.
Well, now
then it juices investor activity, right?
Yeah. Well, now so Silicon Valley Bank. I mean, I've heard the new president was sending out emails and saying this is the safest bank in the world now.
What's that? The new president?
The new president was sending out emails to previous customers saying, "Listen, bring your money back because this is the safest motherfucking bank in the world now." Right?
Well, there's some interesting developments in that front as well. But anyway, so I thought it meant that housing is going to loosen up again. If rates could drop, let's say to 5s, right? 5.5, something like that. I thought it would unlock inventory because there are a whole bunch of people sitting out there sitting on like 3% mortgages. They want to move up, but they're like, it doesn't make any sense. At 5.5, they might be like, all right, you know what? We can afford to pay a little bit more and move up. Yeah, no, what I mean is it unlocks inventory.
I understand what you're saying. I mean, I
thought something like that could happen. If the rate's going to be high, if it stays at 7, it stays at 8, then no one's. I mean, inventory will remain locked up.
I don't see any movement until next year, unfortunately.
And why do you think rates will be down next year?
Well, I think we're just, with this inflationary, how inflation is, we got to get, I think that's still a number one issue. And until that's kind of solved, they're going to keep pressing and raising to get it down. And housing, they've always said, is still like, a number one cause of this inflationary thing. Right. Yeah. So, I mean, the way you do that is you choke it out. Right. So they're not going to like juice. They're not going to two things at once by lowering the rate or pivoting, and then which is going to juice the housing, which is then going to make inflation go over again. I mean, it's a talk about a rock and a hard place. I mean, it's a really tough thing for the Fed or the government to kind of figure out. If indeed they do a pivot, and I don't see how that happens, and I'll say this, it would be more of a political move, but they're not supposed to be political. But you and I are both adults. We know that's all bullshit.
I mean, they rescued SVB. That's about as political as it gets.
Oh, God, man.
That's a lot of donors who had their money in that bank.
Agree to disagree.
A lot of donors. To both parties, but a lot of donors who had their money in that bank. Not a
Yeah.
lot of, Joe six packs, right?
Well, it was the 20th largest bank in the world, but yeah, or the country.
The
So,
number one largest bank still has a bunch of Joe six pack depositors, not SVB though.
and yeah, Rob Hahn, the populist. This is fantastic.
I'm just saying. I'm here in Vegas, like.
No, it's funny because I love this because we've been making so many goddamn I was talking to somebody about this, and they're like, God, how many steak dinner bets do you have with him? I'm like, we got a lot, and it's recorded, but I couldn't. Somebody's got to go out there and like create a list of like what we have to kind of keep track of this.
Yeah.
But man, this April meeting is going to be right. I'm going to write that on my calendar right now, buddy.
That's right.
Oh,
come to Vegas and buy me steak.
And then, yeah, right. So, and then here's the other thing: is like the way this whole, you're really drawing a line in the sand with this. I mean, especially the post you wrote that this is gonna be the de facto turning point, and it's gonna be boom boom days, party till you're 19, till like you're 1999, like it's 1999 for this year. So this is a very clear thing between the Rob and Greg. Analysis here. So this is going to be fun to watch the rest of the year.
Yeah. I think real estate is going to do extremely well this year and potentially next year as well. The only downside to that, though, is when I say do extremely well, I don't think housing prices will go down. I think home prices keep rising. They were showing signs of reversing, right? Like the gains went from like 20% a year to 6% a year to 1% a year, like that. It was still up year over year, but it's still, and they were showing signs of reversing. And in certain markets, we know that they had already reversed. Like home prices actually fallen year over year. And I was looking at it going, but it still hadn't fallen compared to 2019, right? Or to 2020 pre-pandemic. But it was showing that sign. I think now we're going to see that reverse again, and I think it'll start rising again. Maybe not 20%, like we saw in 2020 or 2021, but maybe 3%, 4%. I think it keeps rising because again, I don't know if maybe we need to talk about this. Like, this has been big enough news now, I feel, that even the corporate press had to cover it to some extent, right? And I think a lot of people, just everyday, regular, average Joes, or for that matter, everyday, regular, like doctors and lawyers who don't really think about this kind of shit, to realize, oh, wait, you're telling me my bank is not actually just a vault?
Yeah, you made that point in your post. That's true. Right. I think a lot of people still think of it that way.
Don't think of like, no, this is a loan. I essentially loan money to the bank, and my account is just how much they owe me back. I think once they realize that, I think a lot of, again, wealthier people, right? Like I have some doctor friends. I'm sure they're calling they're talking to their wife, or they're calling their accounts like, hey, how much money do I have in my bank? You know what I mean? And when they say, well, you have $400,000 in that bank, they're like, oh, we need to pull out $150,000 because the FDIC limit is $250. Now, maybe they're not, and this is where we need to go. Like, this is the next big thing, and I just put up a post about it today. There was an amazing confrontation in a Senate hearing. I think it was today, between Senator Langford of Oklahoma and Janet Yellen, Secretary of Treasury, where he asked her, like, straight up, like, so, hey, going forward, every depositor at every bank is now covered, right? And she's like, no, only depositor at the important banks are covered. And let's just say that he didn't take that kindly, which, because dude's from Oklahoma, right? I mean, most of his banks are not systemically important.
Well, I mean, some oil there maybe, but yeah.
But, but at the same time, those are the contributors to his campaign, right? So back home in Oklahoma, some local regional Oklahoma Energy Bank is going to be much more important to him than fucking Bank of America, right?
Right.
So I'm like, yo, it is not going to end here. It doesn't matter if Janet Yellen and FDIC and you think, oh no, we're only going to rescue the systemically important banks. I'm like, nah, Congress and the Senate are going to make sure that is not the case. Right? Because those boys and girls cannot go home to their voters and say, hey, so we're not important enough. your banks are going to fail. Move all your money to Bank of America. They cannot do that. So they'll pass some legislation. They'll have some hearing. They'll do something to be like, no, you're covered too. Don't you worry. Leave your money in the Oklahoma Community Trust. I mean, I'm like, dude, I can't think of anything more certain. That's a bet you don't want to take. That politicians are going to act like that. You cannot take that bet. You know what I mean?
Well, it seems in the chat, it looks like Mirden, our producer here, he's compiling the list, and I have at least 4 steak dinners. So we're somebody's out there thinking about us here.
So here's the question for you, because this is the thing I think is harder for outsiders. You know, everyone could have this conversation. I think one of my more controversial calls on this is that the 30-year mortgage might be gone as a result of this action, right? Obviously, that assumes that you have to agree all depositors in U.S. banks are fully covered, no matter what. Like, that's the idea of 2 classes of banks, sort of the preferred banks and non-preferred banks, that can't happen. And I don't think that can happen politically. So ultimately, I think it will be all depositors or all U.S. banks are fully covered. What's your take on that?
God, things move so slowly. I mean, I remember you and I in a bar one time. Were really you thought that the FDIC, or not the FDIC, but the mortgage interest deduction was going to go away.
Yeah, I did.
And
I really
that's
did.
still here. That's that's. Were you giving a time frame on that?
This was during the Obama era, right? When it looked like Democrats and Republicans both were just going after the MID hard.
Yeah.
I
mean, the inertia around this stuff is so strong that the industry around the 30-year mortgage rate is so term, I should say, is so ingrained. And this is what we were talking about, before with the commissions, right? This has been around, the inertia around is so long. It's like people are going to figure out a way to get paid on the commissions, but I just don't see it. I can't see it going away.
Here's why it's different. Here's why it's different, Greg. The mortgage interest deduction was going to hit current homeowners. If they eliminated the MID, every homeowner in America would have been like, I got to pay more now. Do you know what I mean? And that's 65%, 66% of Americans. If the 30-year goes away, obviously the existing 30 years don't go away. Like, you already have a mortgage loan, right? 30-year going away means future buyers will not have access to 30 years. Now you're not going to get the same level of resistance.
Is it going to be a 40-year or a 25-year? What are you arguing? What side?
I think it's 5-year floating. God. I think it's Canada. I think we become Canada.
Oh, Canada.
Yeah.
Blame Canada. That's the song I was thinking of.
Because one of the lessons that comes out of this is, if you're a bank and you have on-demand deposits and you need to put your money and invest in longer term bonds, it's real risky to be buying 30-year bonds.
But right? I mean, I've got to believe there's banks right now offering 5-year floating. I mean, there's so many financial instruments out there.
Sure.
It's already, if it's already available, why aren't we doing that? Why aren't consumers doing that?
Because they're not agency underwritten. So the unique thing about our system was that we had Fannie and Freddie, and then the right implicit guarantee of the government that said, hey, if you buy these bonds, we're going to guarantee repayment of principal and interest. Yeah. Right. So the idea was you can't lose your money. You still have interest rate risk. Right? Like, you bought bonds that pay 2%, rates are now 5%. Okay, their bonds aren't worth as much, but you could hedge against that. You had duration risk, like this pays off in 30 years, right? But you could, figure something out, sophisticated financial instruments. But the whole idea was this guarantee meant you can't lose money. I'm saying that this bank bailout guarantee means you can't lose money. If you just deposit your money, especially with one of the privileged
banks. In the right bank.
Correct.
Just to go with what you're saying, right?
That's right. In the bank for dukes and royalty, then you can't lose money, right?
Now, one thing an offshoot of this I have to figure out is, like, if you have your money in a brokerage account, are those protected differently than in a bank account?
Nope.
Yeah, Okay, I'm gonna think about that a little
Exactly.
bit.
Exactly. So I'm sitting here, okay, now why would I buy a mortgage bond then? And I don't
Yeah,
mean I like as an
great
individual,
question.
right?
Yeah.
If I'm an insurance company, if I'm a retirement fund, right? And I'm like, I have to protect the principal. I have to protect this money that I'm investing. I don't mind taking a lower return for security. That's why they were buying mortgage bonds. Why would anyone buy mortgage bonds now?
Well, I mean, they're painting this as a temp thing of a emergency thing that's not going to change anything. But I mean, if it does begin to grow because there's some sort of contagion, as they're calling it, I mean, you're right. It would threaten kind of the way we think of things, but hopefully they've stopped that off. I mean, I know we have to wrap here soon, but I don't know about how the Credit Suisse thing kind of falls into this, but
Yeah, I don't know either because that's Europe, right? It's a
yeah,
Swiss-based company, and then the Swiss National Bank bailed them out. So I don't. It's not as
it's
close
just
at hand.
it is. I'll give you this. It's all spooky. It is all spooky here. I don't,
What do you mean spooky?
it's just these things that are happening. I mean, like you said, who had this on their freaking dance card at the beginning of the year? Right. And
Yeah,
it's just little things out there you start hearing, and all of a sudden, banking crisis. What the fuck? Right. I mean,
yeah,
we got a lot of problems, but what is this coming up? So I don't know, man. Well,
yeah,
it's gonna be interesting.
yeah. I mean, I had a version of this on my dance card at the beginning of the year, but it wasn't bank failures. It was treasury bond failure. But that's bond auction failure. That's probably worse.
Yeah. Does this?
Anyway,
It does kind of fall into paying gold for oil in a way, though. I think. Well, again, we have
of
to
course it
tease that out
does.
later on.
Of course it does. And it's the problem is that I'm a student of macro, and I think it's really fun to think about. But you're right. You start thinking about it a little bit too hard, and you start going around the circles,
Yeah.
right? So I think the way I kind of ended the essay. So let's end our podcast with this. I think what it sort of ended up coming back to was I went into this like down this rabbit hole, and it's like interest rate swaps and default risk and duration and all this and global financial system and this, that, and the other. And it started getting really confused. And I said, wait, at the end of the day, okay, what does this do for our industry? And I'm like, at the end of the day, people got to eat. You gotta drink water. You gotta have sexy time, and you gotta
Yeah, to
live
have
under a
shelter.
roof,
Yeah, shelter.
right? And I'm like, I don't know how the financing for all this is going to play out. And maybe one day we start trading gold for houses, but that people need to live in a house or in a building at least of some kind with a roof over their head, that is not going to change.
Yeah,
Right. And I'm like, so from an industry standpoint, I think we'll
real
somehow
estate is
still,
yeah. No, I agree
right?
with that. I agree with
Yeah.
that.
Commission all like, yes, that's all true. But you know what? People need a roof over their head. So somehow we're going to be okay. That's why I think we're still going to party like it's 1999 as the rest of the world starts to burn. Anyway, all right. So I got another steak dinner bet. God damn it.
This is coming up quick, though. The other ones are kind of farther off. So this is April.
Yeah.
I can't wait for this.
April. All right. So let's some listeners gonna remind us come May. Hey, so what ended up happening with that?
Yeah.
All right. Well, hey everybody, thanks for listening to two idiots opining on the internet. And appreciate everyone. Appreciate you, Greg. Appreciate you, Fab.
Thank you, man.
See you.